Hey guys, it is Julie here with JT Wealth. Today we're taking a look at 4 strong buy dividend stocks for the month of February. So let's get into it. Alright guys, thanks for stopping by. Today we're taking a look at 4 great dividend paying stocks for the month of February. These are all companies that have an ex-dividend date coming up this next month so that you can start collecting that passive income soon. We're going to take a look at each of these companies, what it is that they do, and what analysts are predicting for the stock's future. Now, I do apologize for the toucan lumberjack outfit here, but I got to shovel over 6 inches of snow. We have a big snow day here, and the hair situation is not okay after that. And yes, I said that I got to. As a Canadian living down here in the States where we don't get snow often, I actually love getting to shovel on a beautiful snow day like this. Also, I know I'm coming out a few days earlier than usual for our February stocks, but I am headed for a knee surgery tomorrow and will be out of commission for a bit. So I wanted to make sure we got this out in time for you guys to catch some of those February dividends. But enough of all that, let's jump right into our 4 dividend paying stocks for the month of February. Plus I have 1 dividend king bonus at the end as well. First up on our list today is Costco Wholesale. With a market cap of $213 billion, the Costco stock trades under the ticker COST, currently priced at $492. They are down about 6.5% over the last 6 months, but have seen slight gains of about 1.4% over this past year. Costco's warehouse-style stores are well known across the globe. Equally well known are some of their food items, like their $5 rotisserie chicken and their hot dog combo at $1.50. It has been that price since the mid-80s. Costco has 845 warehouses worldwide and employs over 300,000 people. This makes them the 3rd largest global retailer and the 11th largest in the Fortune 500. For fiscal 2022, they saw over $222 million in sales and had a diluted earnings per share of over $13. They have been paying a dividend since 2004, so 18 years. They pay a quarterly dividend of 90 cents per share for a current dividend yield of 0.73%. Their next ex-dividend date is coming up soon on February 2nd for payment on February 17th. They currently pay about $1.6 billion annually in dividends and have seen a compound annual growth rate of 13%. The Costco stock has attracted 24 different analyst ratings, coming in as a strong buy based on 18 buys and 6 holds. The average price target comes in just shy of $550. That would be an upside of nearly 13% from current prices. And the most recent rating came just 2 days ago from Cohen & Company with a buy rating at $600 for an upside of 23%. Second on our list today is agricultural commodity company Bunge. The Bunge stock trades under the ticker BG, currently priced at $96.57 per share. They have a current market cap of $14.6 billion and have seen slight growth of nearly 3% over the last 6 months and just a smidge higher at 4.4% for the past year. Bunge's purpose is to connect farmers to consumers to deliver food, feed, and fuel to the world. With more than 2 centuries of experience, they are the world's leader in oilseed processing and a leading producer and supplier of specialty plant-based oils and fats. They work with farmers to improve the productivity and environmental efficacy of agriculture across their value chains and bring quality products from where they're grown to where they're consumed. The company has nearly 23,000 employees across 300 facilities in more than 40 different countries. Their latest earnings report will be coming up soon on February 8th, where analysts are expecting to see earnings per share of $3.14. The company has seen a positive earnings trend over the last few years, which continued in their past 3rd quarter. Bunge pays a quarterly dividend of 63 cents, and they've been growing that dividend consistently. Their current dividend yield comes out at 2.36% with a very healthy payout ratio of 16%. Their ex-dividend date is on February 15th for payment on March 2nd. Now, the Bunge stock only has 4 current analyst ratings, but they do all come in as a unanimous buy. Their average price target comes in at $130. That would be an upside potential of 35% for the next year. And while majority are a few months old, we do have a recent rating from 5 days ago, giving it a price target of $119 for upside of 23%. Number 3 on our list today is a big tech company that actually just reported earnings last night. That is Microsoft. With a market cap of $1.8 trillion, they trade under the ticker MSFT, currently priced at $234. They are down 3% today and nearly 6% over the last 6 months, and down about 15% over this past year. These recent low prices could make for an attractive entry point for the tech giant. Their stock is recently falling after their earnings, where they said that demand for their cloud business had softened. But they did see their Microsoft Cloud revenue go up 22% to $27.1 billion, and overall revenue increased slightly to $52.7 billion. Now, it has been turbulent times for big tech companies, and Microsoft is one of many that will be taking cost-cutting measures, including layoffs of about 10,000 employees. But earlier this week, the company did confirm that they're making a multi-billion-dollar investment into OpenAI, that is the company behind the viral AI-powered chatbot tool ChatGPT. Microsoft currently pays a quarterly dividend of 68 cents per share, giving them a current dividend yield of 1.06%. Their next ex-dividend date is coming up on February 15th for payment on March 9th. Many of Wall Street analysts weigh in on the Microsoft stock. They have 29 current analyst ratings, and despite their earnings yesterday, they still come in as a strong buy based on 26 buys, 2 holds, and 1 sell. With an average price target of $282, that would be an upside potential of 20% from current prices. And we have a flood of new buy ratings coming in just today, along with a couple of holds. The upside potentials range from 12% all the way up to 34%. And fourth on our list, we have a company called Royalty Pharma. Their stock trades under the ticker RPRX, currently priced at $38.53. They are down nearly 10% over the last 6 months, but have come out fairly flat over the past year. Royalty Pharma is the largest buyer of biopharmaceutical royalties, and they're also a leading funder of innovation in the biopharma industry. Starting back in 1996, they have meticulously acquired royalty interests in many of the industry's leading drugs by sales that address serious unmet medical needs and improves the lives of patients around the world. Their portfolio includes over 35 approved products with 14 blockbuster billion-dollar-plus therapies. They partner up with companies to co-fund late-stage clinical trials and new product launches in exchange for future royalties, or they acquire existing royalties from original innovators. They've assembled a portfolio of royalties that entitle them to payments based directly on the top-line sales of many of the industry's leading therapies, including AbbVie, Johnson & Johnson, Pfizer, and many more. Royalty Pharma pays a quarterly dividend of 20 cents per share, for a dividend yield of 1.98% and a nice payout ratio of 25%. Their ex-dividend date is on February 15th for payment on March 15th. Now, once again, not as many analysts weighing in on this company. They just have 5 current ratings, but they all come in with a unanimous buy. And with an average price target of over $52, the upside potential from current prices would be 36%. The most recent rating came in 3 weeks ago with an upside of 22%. The remainder are a few months old, but will likely be reiterated following their next earnings report on February 15th. So those are our 4 strong buy dividend stocks for the month of February. But to wrap it up, I did want to do an honorable mention of a dividend king that has an ex-dividend date near the end of the month. That is Johnson & Johnson under the ticker JNJ, priced at $167 per share. Johnson & Johnson has been paying a dividend for a long time and has 60 years of consecutive increases. They pay a quarterly dividend of $1.13 for a yield of 2.64% and have an ex-dividend date on February 17th. Their stock currently comes in as a moderate buy based on 6 analyst ratings with an average upside of about 13%. So that is going to be all of our dividend stocks for the month of February. Let me know your favorites in the comments down below and what other dividend stocks you have your eyes on. Please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Everyone has different investment goals, so please make sure you're doing your own research and due diligence. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.